The big jobs report from the government's out on Friday. Let's bring Doug Flynn in on this and more, certified financial planner, co-founder Flynn Zito Capital Management. I say and more because we actually had a pretty good service number today, so that's interesting, but private sector job growth cooling. So pick up on what you think is the most important here in terms of the economy.
Yeah, a couple of things. It's the fifth month in the last six where it's declining in terms of the growth. And really, it is all the services. The services accounted for nearly all of the jobs in this period. The manufacturing side in total was only about 3,000 jobs of that total. And direct manufacturing was actually negative 21,000 jobs. And then when you look in there, you look at small businesses between 20 and 49 employees, they lost 36,000 jobs. So there's a lot of weakness on the manufacturing side and other parts. The services sector is really what's keeping these numbers even positive. Otherwise, we'd see a very different picture. And all you need is for the services to come down a little bit, and then people will really see how the economy is not as strong as they might think it is.
All right, that makes sense, and that's why we saw that pretty stronger than expected number on services today. Did you see Nvidia? We did the headline a few minutes ago that it's a $3 trillion company. There's the market cap of this chip maker, which the stock just keeps going up. I mean, come on.
Yeah, so today it finally matched Apple in terms of number two. They're neck and neck right now as the second largest company in the United States and the world, only behind Microsoft by just about 5%. So the way Nvidia is going, it won't take long if Microsoft doesn't move as fast as Nvidia is for it to actually become the largest company in the world. So we're that close, and obviously it's on the back of AI and all that has been going with that. So how much of that is hype and how much of that is going to really come through, we'll see. But that's a very far advancement for that company in a very short period of time to be up there with those big companies that we know for such a long time.
What about where these stocks trade, which is another story that came out today? The easy way to do it years ago would be just look at how many letters were in the ticker. And if it was NVDA for Nvidia, that was the NASDAQ. And if it was 2 letters or 3, that was the New York Stock Exchange. And
that's right.
Kind of all the regional exchanges went away. But now there's this move to bring one back. The Texas Stock Exchange, is that going to be a thing? And if so, what's the significance?
It could be a thing. There's actually other exchanges. There's something called the Members Exchange where a couple of companies have got together to trade. It's all about if they can execute more efficiently and cheaper. In the end, that's better for investors. So they've got some seed money from 2 big companies.
Yep.
We'll see if they can file the regulatory requirements with the SEC and get approved, and then they're going to try to get some trading going on next year and maybe get some listings in 26. And it's about competition versus the New York Stock Exchange and the NASDAQ. And so, both of those bigger exchanges have a lot of regulatory requirements. And Texas is going to say we're going to go a little bit lighter. And it isn't necessarily from a compliance standpoint. It just might be certain rules like the biggest one that comes up all the time on the NASDAQ, if you're going to list there, is that your board must match a certain caliber of diversity. And a lot of companies just, no matter how hard they try, can't make that happen. So they can't even list on the NASDAQ. And so this is competitively another option, perhaps, for them and other companies. And we'll see how it fights out. But if in the end it results in cheaper trades, then that's the benefit to everybody.
So that might be the benefit. It's not, is it, you were getting to this a moment ago, is it kind of part of a wider culture war like everything else in this country? It's kind of like the anti-woke exchange. I saw somebody was saying that, or that's not really what this is about.
I mean, there's always going to be a couple of companies that doesn't necessarily make them bad or good by having one or the other. It's just an alternate. And some companies, there might even be financial requirements that a company just can't meet for whatever reason. Now, maybe that's a different story, or maybe they've just raised the levels so high on the NASDAQ and the New York Stock Exchange that you just can't list there. And in fact, we've seen this years and years ago. There were many times the amount of companies there are now listed on the stock exchanges. So many now are just private. They've remained private. They can't even be bothered listing. So you hear about all these private companies and private equity. Yeah, because it's many times bigger than what is actually being traded on the exchange. So maybe if it broadens what's traded, that is better for everybody. I don't know how far it goes with politics and everything else, but it's all about getting more out there for people to take advantage of, because we really can't take advantage of it on the private side for a lot of folks. So more public is better. and more competition is better.
Before we close up trading, wherever they're trading, let me combine two sets of numbers here. We talked about the Wall Street Journal earlier because it wrote the story about Biden, but there's another story in the Journal today about Americans having more investment income than ever before. We have a screen we'll put up on that in terms of the percentages. There it is, assets by income. The second thing, Decision Desk HQ, our partners there, have a poll about the percentage of Americans who say they're living paycheck to paycheck, and it's a majority. 58% say they are. So we're investing more than ever before, but also living paycheck to paycheck. Explain.
Yeah, that comes down to the fact that if you wanted to participate in this higher income, you had to have investments. You had to be in real estate, so you had to be part of the investor class versus the debtor class, and so that's why a lot of it has gone to the people that did have some investments. Yeah, there a lot. The other stat I saw was 62% of people in the last month had to cut back on expenses, and more than half of them were in groceries. So you have a dichotomy right now. Some of it is masked by the wealth that they've, if they had money put away, and that's widening. So we'll see how that plays into politics very soon.
Doug Flynn, a representative of the investor class, joining us today from Long Island. Thank you, Doug. You represent your class of people very, very well.